Welcome back. The SGX Nifty is indicating that we'll have a weak start, 240 down on the SGX Nifty. Remember, this is on top of Friday's decline when the Nifty was down 220 points. Prakash Diwan is joining us now. Prakash, hi, good morning. Thanks for joining us. Prakash, I wanted your thoughts first on this news flow on BPCL and the fact that Anil Agarwal's telling us that the divestment is off. Your thoughts on how the street would react to it?
Good morning, Anuj. Yeah, it is definitely surprising, and it is a setback to this whole juggernaut of government divestment, and particularly when companies like BPCL, which are very good on for all the performance metrics, also find it difficult to find the right suitors, and probably the government's expectation mismatch in terms of the price that they had started working on, and what probably is on offer is definitely sad. But my sense is, Anuj, there could be a potential re-rating of the company's business, given the fact that energy as a whole, and particularly hydrocarbons globally, is getting into a reset of sorts. So if that were to happen, it might end up being slightly better, but maybe more elongated in terms of the timeline. So what's been deferred is probably going to be more beneficial in the quantum of divestment that they could take. So, and remember, it's a statement from a potential suitor and not from the government as such in the clarification in that sense. So we'll have to wait for that. But I think BPCL is poised for a little bit of a re-rating once the government's intent is well articulated and digested. Hydrocarbons as a whole are doing well. Look at how the US is kind of shaping up in terms of expansion of the sector. I don't see any reason to worry, but yes, it definitely takes away the winds out of the sails in terms of the divestment that a lot of people were expecting, especially that 540, 550 zones that everybody had penciled in. So from that perspective, yes, a bit disappointing, but for long-term value investors, it still offers great opportunity.
Prakash, hi, good morning. ICICI Bank has definitely raised the bar, right, in terms of earnings performance. I mean, record margins, strong asset quality. In any case, at a time when people are sort of moving out of names like HDFC Bank, you think more money will flow into ICICI Bank now?
Good morning, Sonia. So, one of the most interesting headlines on one of the brokerage reports that I read was we found the next HDFC Bank. So that was really telling. It's been a long time coming in terms of somebody challenging the numero position that HDFC Bank had so strongly held for all these years. For its own share of growth dynamics and transitory dynamics, it's kind of like slip from the podium position, and that's where ICICI Bank is probably very rightfully and deservingly filled in that gap, or is trying to fill in the gap. My sense is this: last time when we saw those two quarters, Q2, Q3 were also very promising, especially when the industry was struggling. They actually reported credit growth, which was very commendable. And there are newer segments that are contributing. If you go through the fine print, it's a lot of retail, it's a lot of SME loans, which is not something which you rely on when you want to expand your book, right? But ICICI has done that. Credit quality is very much under control, and in fact, it's been improving. So they've definitely kind of this quarter proven that they would probably fill that gap very well. Yeah.
We have Krishnan ASP also joining us in just a bit. Krishnan, I'm going to come to you. We're going to come to you in a bit. Just one more question, sticking with financial services. Prakash, we got the LIC thing moving now, the IPO. From initial, what the ask was, I mean, I think it's been cut down quite a bit, right? The new valuation prices it at about 1.2, 1.3 times embedded value. What does that mean? I mean, would it mean a sharp cut for private listed insurance, life insurance players with LIC pricing itself there, or do you think the valuation gap can exist? And also just a word on the fact that they're going to be selling 3% of the company. So it's a public issue, but the fact is, 3%, 97% still with the government. Is it? Where does that leave you, just in terms of perception?
Good morning, Prashant. So, it's pretty complex, from 13.5 lakh crores to 6 lakh crores, and that tells you how the markets can change expectations. I think very clearly LIC was expected to fetch a very significant premium given its footprint and given its scale. But given the market conditions right now, and especially the FI flows directionally, I think the government probably might want to play it safe by just testing waters, dipping into the public float and saying, okay, 3%, but let's kind of set a benchmark. And you always have subsequent OFSs that those are which are likely. So my sense is the premium between private sector players and LIC will continue. I don't see any reason for that to contract just because the LIC thing is because the expectations were too high and probably they are getting rationalized. Because remember, the new growth that's coming for the likes of ICICI and ICICI Pru and HDFC Life has been significantly faster. So at some stage, they would kind of start catching up in that terms of scale. LICs, of course, they've got great history, but I think the premium valuation for private sector will continue irrespective of this reshift of this shift in terms of valuation or expectation that's happening from the IPO.
Okay. Well, let's get back to ICICI Bank then. We have Krishnan ASP also joining us. He's lead analyst BFSI at HDFC Securities. Krishnan, hi, good morning. All the reports that I was reading was saying that, perhaps this is best in class now and deserves to perhaps trade at, high multiples, some even ascribing 3.5 to 4 times price to book. Your thoughts on the numbers and whether it is now the clear leader in this space?
Yeah, very good morning, everyone. So, very clearly, they are the sector leader right now. They are emerging with the lead. They are in position, and these performances only stand to strengthen the merits of that argument. So yeah, I mean, at this point of time, also given the fact that the market leader has its own challenges in the recent past, and they have probably taken an unscheduled pit stop, as I would say, it's but natural that the sector leadership is now veering towards ICICI Bank purely based on execution. So yeah, I mean, no wonder. I mean, it's not about whether it's 3.5 times or 4 times. I'm just saying, just the consistency in execution is something extremely heartening, and that's probably the reason why there are re-rating catalysts out there. Yeah.
Krishnan, hi, good morning. On a valuation parameter, just to put it on board, 1 year forward, the core price to book is around 2.3 times, right? And if that is the case, it's not expensive at all, at least compared to some of its peers. So do you see a valuation re-rating as well, not just because of the earnings, but on a relative basis?
Yeah, absolutely. So as I said, I think the earnings growth at this stage, I wouldn't extrapolate FY22 into the next 2 years or 3 years. This was an exceptionally strong year. I don't anticipate every year is going to be as great. So earnings growth will probably moderate, absolutely, for sure. But we do expect re-rating. Largely because number one, in absolute terms, ICICI Bank is executing a lot more consistently. And number two, as I said, sector leadership, there is a gap, as Prakash also mentioned. And you need someone to now fill the gap, and ICICI Bank is in a sweet spot for at least the next couple of years, I think. Yeah.
I mean, let's see if it performs. I mean, the stock, that is, the day after, it's now last 2 quarters, numbers have been super, but the stock's not. But that's been the case with large cap banks as well. Krishnan, hi, good morning. Prashant here. You track life insurance as well, so I want to put that question on LIC's valuation vis-a-vis where the rest of the private listed life insurance players are trading at. And should one expect any narrowing of gap, or that is not going to happen? And also, if you want to react to the news of at Aditya Birla Capital, which has appointed Vishakha Mule as the CEO. Go on.
Yeah, hi Prashant, good morning to you as well. So first on the narrowing of the valuation gap between private sector life insurers and LIC, I think that exists for a reason, right? I mean, very clearly there are efficient players in the market, mostly in the private sector, and that's the reason why there is both a growth premium as well as an efficiency premium built into the private sector life insurers. So I don't expect any immediate headwinds to that valuation gap at all, right? I believe private sector life insurers will remain better valued. That's one. The second, on ABCL and Ms. Vishakha Mule being appointed there, I believe it opens up a call option. Having a banker with such strong credentials, hopefully there is a call option there of ABCL as a non-operative financial holding company getting converted into a bank. I'm sure it doesn't hurt their chances at all. But even outside of that call option existing, we have been fairly constructive on ABCL. They have two businesses, one of which is listed, ABSL AMC. But even outside of that, I think there is just the NBFC business, which is almost run like a bank today. So we are extremely constructive on the name, yes.
I think another thing, just coming back to this whole ICICI Bank discussion then, Krishnan, another thing that really worked well for them is their digital initiatives, right? How they transformed into a complete digital franchise, and because of which their retail segment did extremely well. Do you think that could give them a further edge over the other banks in future, and is that priced into the earnings as well?
So retail has done well. I think all of their tech initiatives are helpful, and I think they've probably invested ahead of the curve, having learnt from the headwinds facing other lenders, right? Which is very good. I think, as I said, Sonia, is that next 2 years I don't see much of a problem. There are not too many speed bumps. You are on the F1 highway. Even when you can deliver 17% ROE, but I believe there is an interesting trade-off now for ICICI Bank. I would much rather that they keep delivering 14.5%, 15%, leave some 2 percentage points on the table, knowing that they can deliver, but rather reinvesting that in building new growth runways. I think that's a far better medium-term outcome for ICICI Bank, rather than focusing too much on just maximizing profitability today. And if they go that way, I see that this valuation runway that exists for ICICI Bank could last a lot longer.
Okay, Krishnan, we'll leave it there today. Thanks a lot for joining us. I mean, absolutely, in terms of digital and retail, ICICI Bank has done quite well. And, as a user, I can say that, they've been, miles ahead of everyone else in this space. Prakash, just to come back and complete this point, now I'm looking at last 1 year performance. HDFC Bank is down, Kotak is flat, Axis is up a bit, and then you have ICICI Bank and SBI. ICICI Bank is up 31% and State Bank of India is up 48%. That's a 1 year chart that I'm referring to. Why I want to bring this to you is this is quite similar to what happened in the last rate hike cycle as well. You think these two perhaps will continue to take the lead over the others, SBI and ICICI Bank?
Anuj, that's a very interesting observation. Very few of us actually try to build this anecdotal data, and you're right. The up move in the rate regime is something where banks which are expanding faster than the others in terms of market share tend to do very well, because you pick and choose the right kind of clients quality wise and at better rates. Higher interest rates always leave much more flexible names which are always trending stronger. So that's very clearly going to work for ICICI. The reason why an SBI did so well in the last 1 year is it was a catch-up play. You remember 3 good quarterly results from SBI and the stock started getting re-rated. After that, the results have been fairly okay. They've been good, nothing very scorchingly positive, but the stock continued to rally because it was a catch-up. With ICICI, I think it's still on because the catch-up has much more headroom. The market share growth that ICICI keeps on talking will probably drive that. So I'm quite positive on ICICI doing that. I'm not too sure of SBI unless they also kind of rejuvenate themselves with something. But at this point, ICICI definitely seems to be poised for a very strong up move in the next 12 months.
Okay. Any view on the Reliance-Future, announcement that came through? I mean, the way forward now is that Reliance will be getting access to 950 of those stores, despite the deal being called off. But your views?
Sonia, this is quite positive. It's positive more from the perspective of the absence of anything negative that could potentially come. So it's an overhang that's out of the way. This was a huge speed breaker bump in terms of Reliance integration to the future assets. particularly the backing. But this whole time that has been available has helped them re-strategize, go to plan B, plan C wherever required, and still march ahead with the expansion that they had in mind. So this acquisition of these 900 plus stores is only going to be much more easier to integrate with the rest of the Reliance assets. So I think it's very positive. Now you at least don't have any surprises. This is out of the way. The deal is closed. Anybody who wants to fight, it has nothing left to do. And Reliance will probably start utilizing these stores in a far more effective way, wholehearted way than what they've done in the past.
Prakash, briefly, if you can come in on the news from Indonesia. It came as unexpected shock to the system, and we import. We're the largest importers as a country of palm oil from as an importer actually, and we get most of the imports are from Indonesia and Malaysia. What does it do for sort of companies in the space? I mean, there's Adani Wilmar, there's Marico, there's Ruchi Soya, and then there are the consumers, the FMCG staples companies. Your thoughts?
So, Prashant, interestingly, the direct correlation is with these FMCG names, especially the likes of HUL and Godrej Consumer, who have a dominance over this market. But, the consumer has much more choice than just depending on one particular oil variant. And there will be switches that people will make. Affordability is always very tricky in terms of some of the other names that you could see, the other options, alternatives to palm oil that the consumer companies will start focusing on. If you recall, 5 years back, Rice Bran oil came and was positioned as a premium product. We still have enough access to that, and it would probably start being, expanded in terms of a segment. The real impact, if you ask me, is going to be on QSRs or on the food and hospitality businesses, because they are going to find it extremely difficult to digest this price hike and pass it on in the retail prices. So I think that's going to be a severe and more damaging than just the FMCG branded names at this point.
Yes, in fact, palm oil futures are up 6%. So big surge happening on that front. We'll take a break. We'll come back with market technical. Sudarshan Sukhani and Mitesh Thakkar will be joining us.
I'm your guide. Which language are you comfortable